So why would I do that? I'd much rather have physical possession of gold. And that's where I want my currency reserves. I don't want them in US dollars and US treasuries. There's that tailwind. But I think what else is happening here is that it's one of those rare situations where nominal rates are rising, and you would think the Fed, with inflation, and you would think the Fed would be like, hey, we have to fight this. We have to raise interest rates. This is one of those rare times in history where you see it's clear to everybody, other than the mendacious 12 that sit on the voting the members of the FOMC, you should be hiking rates here, but you're not. You're actually preparing to ease monetary policy.
In the latest financial commentary, Michael Pento, a seasoned market analyst, raises alarms over what he describes as the U.S. government's implicit default on debt through inflation. According to Pento, while the government hasn't failed to meet its debt obligations, in the traditional sense, its monetary policies effectively diminish the value of its debt repayments, affecting bondholders and savers alike. He points out that this subtler form of default isn't as straightforward as an outright payment failure, but is equally detrimental to the economy's trustworthiness. Delving deeper into the misrepresentation of economic data, Pento criticizes mainstream financial media for glossing over the severe impacts of inflation. He argues that many economic indicators reported positively by major outlets fail to account for the true inflation rate, which would otherwise reveal a downturn in real terms. For instance, what appears as an uptick in retail sales is, according to him, a facade that crumbles when adjusted for inflation, revealing stagnation or decline in actual consumer spending. The ripple effects of inflation are notably pronounced in the housing market, as Pento highlights. With inflation driving up interest rates, the cost of home ownership escalates beyond the reach of average Americans. This tightening of financial conditions, combined with high mortgage and related home ownership costs, is freezing real estate transactions and pushing the American dream of owning a home further out of grasp for many.
But isn't the Federal Reserve purportedly for the middle class? They're for the poor, right? That's what they're there for. They want stable prices and full employment. They're there for you, right? Their goal should be, Dunnigan, their goal should be deflation, not disinflation, not reflation, not intractable inflation. Their goal should be deflation. According to my calculations, home prices and stock prices are 40%. I'm going to be accurate. They have to fall by 40% just to bring them back to historical normal ranges. Home price to income ratios and total market cap of equities as a percentage of the economy. Fall 40%. Now, that leads me to the truth. Why? Why do you think Powell? Don't you wish, Dunnigan, you could ask the Chair Powell a question in one of these meetings? I was like, Mr. Powell, does it bother you that first-time home buyers can't buy a house? Does it bother you that food prices are up, by a third in the last 4 years since you engaged in monetizing Janet Yellen's, helicopter money? Does that bother you at all? Isn't the real reason why you want to cut rates in this environment when you're moving further and further away from your goal? Isn't the real issue that banks hold commercial mortgage-backed securities? Banks hold residential mortgage-backed securities. Banks own treasuries. And aren't all of those asset prices plunging because of your desire to raise interest rates? You're well-founded, although in vain to this point, trying to reduce the rate of inflation back to where back to zero, where it should be. But really, like I started saying, it should actually be a desire to bring deflation for a while, just to get these asset bubbles under control and to bring home prices back to a place that can be supported by the free market. That would make the most sense. Now, Corporations have to refinance $1.8 trillion of debt by the end of 2025. Their refinancing costs are up 45%. So the government is paying $1 trillion in interest payments in 2025. So those are the reasons why the Fed is saying, no, there's no inflation. It's lumpy, it's chumpy, it's loppy, blah, blah, blah. I mean, no, you're protecting banks. You're protecting the government. That's first and foremost, and corporations. That's who you have in mind when you say you're gonna cut rates and end quantitative tightening. You're gonna reduce it by half very, very soon because you're panicked to try to keep asset bubbles afloat.
Now, Michael Pento delivers a sharp critique of the Federal Reserve's handling of inflation and interest rates, arguing that its policies have fallen short of their core objectives. He contends that the Fed has not managed to maintain stable prices, which has not only led to financial instability, but has also distorted the public's understanding of the true state of the economy. Pento believes that this misleading picture is exacerbated by the Fed's reluctance to adjust their strategies, even in the face of escalating inflation rates that undermine the economic health they aim to protect. Like, subscribe, and turn on notifications so you do not miss out on our daily videos. Let's get back into the episode.
So Jerome Powell is doing his impression of Baghdad Bob, if you remember the. It's like, oh yeah, we're winning. We're winning the war. Everything's great. It would be a stretch to ask these people who have made themselves demigods, like, oh, I know the direction of the economy, and I know exactly what the cost of money should be at all times. Me and the 12 members of the Federal Open Market Committee. Well, there's 12 voting members. It's 15 members altogether. And why, Dunnigan? You're a religious guy, and I am. Like to think I've read the Bible and have gone to church most of my adult life. How many apostles were there?
That's 12.
12. Is it just by coincidence there's 12 voting members, 12 regional banks? I mean, these people want to portray that they're omniscient. They're demigods, and they know better than the free market. But in reality, what they really are politicians. They're politicians. And what politician wants to get up and say, we need deflation and we need a depression for a few years just to reconcile all of the imbalances that we have created since really 1987, when we went on this wild idea, this idea that we have a tool. 71, we broke the gold window. 87, we printed a tremendous amount of money to bail out the stock market. And we continued this philosophy because we had the hubris to believe that we don't need a bear market in stocks. That's bad. Dunnigan, why would you want a bear market? And why would you want a recession to clear out all of the, light a fire and burn out all of the dead brush so you wouldn't have a conflagration that would burn down the whole woods? You don't want recessions. You don't want bear markets in stocks, do you? Well, we have a tool. We could just print money, unfettered, without any backing. It's meaningless. It's fiat, 100% by decree. So what happens when you do that over and over again? Eventually, you create massive asset bubbles, and you encourage a tremendous amount of debt via interest rate suppression. That's where we are right now. Listen, there's a record $1.3 trillion of credit card debt. Delinquencies are up 59% year over year. It's the highest since 2011. Corporate debt has surged to 115%, up 115% since 2007. Household debt, Dunnigan, is up to $20 trillion. People say, excuse me, oh, the household's deleveraged. No, they have. Oh, they're sitting on massive amounts of cash. Well, most of that gets true. Most of that cash is, in aggregate, they are. Most of that cash is in the upper quintile. But they also have a record amount of debt. And that's up from $15.6 trillion in 2019. So there's been no deleveraging, like there's no debt outstanding. There's a tremendous amount of debt outstanding. And asset bubbles have never been more egregiously priced or valued as a percentage of incomes in the economy. But then again, there's a reason why 78% of Americans are living paycheck to paycheck. That's why the Fed is panicked to get interest rates down. But here's a little secret for them that maybe they're not aware of. They do control money market rates. They control the overnight interbank lending rate for sure. And they can control the rate on T-bills for sure. But do they control long-term interest rates? Long-term interest rates are a function of debt supply issuance, the insolvency or the solvency state of the sovereign, the credit rating of the sovereign, and inflation. That's what they're a function of. And how do we count on those scores? I think that the surprise is going to be, and it's not a fat tail risk. It's almost, I'm going to say guaranteed. It's a very high percent chance that when the Fed cuts interest rates, the yield curve uninverts, long-term rates soar higher. And is that going to be how is that going to ameliorate the housing market? Is that going to be a big fix? I mean, normally the way the Fed fixes things, at least temporarily, when they say put their head in the sand, how do they fix things? Well, they lower interest rates, print up a bunch of money, and take the whole interest rate complex down, the whole curve down. So short-term rates fall much faster than long-term rates, but borrowing costs ease, and the amount of debt outstanding is not as pernicious as it once was. But that's not going to happen this time, because we've already inculcated to the globe that the Fed doesn't care about the purchasing power of the U.S. dollar, not against the euro, the yen, the pound, against hard assets, against gold and silver and oil, real estate, even the horrific Bitcoin, which I probably will never own. I eschew that. I reject that on moral grounds. But I'd much rather own a real element, a very rare element, very beautiful element, a virtually indestructible element, than a bunch of letters and numbers that exist on in the netherworld.
What do you think of Pento's take on today's episode? Do you agree with him? Post your opinion in the comment section down below, and check this video right here because you'll love it.